Hey everyone, welcome to Property Finance with Lee. Today we're diving into a challenge that many contractors and self-employed people have, which is providing the necessary income verification documents when applying for a property loan. Just some background, if you're new to the channel, I'm a licensed mortgage broker with an extensive property investment background. I talk all things property financing and investing. If you're interested in watching more videos from me, subscribe and turn on notifications to keep up with my latest content. Let's jump in. Let's begin with what a LODOC loan is. A low documentation, or LODOC loan, uses alternative forms of income verification to assess your suitability for a loan. For the self-employed and contractors, sometimes traditional income documentation requirements can be a hurdle when seeking property finance. Fortunately, LODOC loans employ alternative income verification methods to demonstrate your ability to repay a loan. To illustrate this, let's use a scenario everyone can understand. We're rewinding time and going back to those awful COVID shutdowns. Imagine you owned a food business. No doubt your business suffered during that period. You lodged tax returns for those years which were not indicative of your usual business income. With the lockdowns and social distancing, how could they be, right? Now, it probably took you a long time to get your head back above water. And as such, you've held off from completing your latest tax return. As we know, tax returns are only lodged once a year. Your most recent tax return may be more than 18 months old, and in this example, not reflective of your current post-COVID lockdown income. The issue is financing through traditional means will be difficult, as most lenders will require at least 2 years full financials. This is where a LODOC loan solution may be used to secure your property loan. Some lenders will allow you to use alternative documentation such as recent business activity statements to verify your business turnover, expenses, and potential profit. They will also look at your business and personal bank statements, which can show the salary you've paid yourself as an indication of your actual annual income. Other lenders are happy to accept an income declaration and a letter from an accountant to confirm the borrower's personal and business income. Just note that the income verification criteria required for a LODOC application can be vastly different from lender to lender. A typical LODOC home loan requires a 20% deposit contribution from the borrower and are available for mortgages on both owner-occupied and investment properties. Besides the way the borrower's income is verified, all other aspects of a LODOC home loan are the same as a standard home loan. What about a LODOC commercial property loan? Does that exist? Yes, it does. Obviously, being a commercial property loan, the interest rates will be typically higher than its residential counterpart. Now, a question I get quite a bit is, how expensive are LODOC interest rates? Are they way more expensive than a regular loan? If you look at a single lender which offers both a regular full doc and LODOC loan, more than likely, the LODOC option will be slightly more expensive. Sometimes though, they can be cheaper than a full doc loan offered by a competitor. People hear LODOC and automatically assume they will be paying a massive amount more than a full doc loan, and this really isn't the case. With a good credit score, a sizable deposit, and strong cash flow, the interest rate for a LODOC loan can be very similar. Now that being said, if your LODOC loan application includes a credit report which has defaults on it, or you've been operating for a smaller amount of time within your industry than what is typically required, you can make the assumption that the product you're eligible for will be more expensive. And this makes sense, right? Lenders price products based on many factors, but one of the main ones is risk. The bigger the risk they take on your loan, the more you pay. These loans can get complex. It's essential to choose a lender willing to understand your personal circumstances and your business structure. A mortgage broker can guide you effectively in choosing the right lender for your situation. Not only for speed, which is one thing, but attaining approval, which is what you're ultimately looking for. Speak to your broker, ask if they have access to specialty lenders on their panel, as this can increase the options they're able to present to you. If you have specific questions regarding LODOC loans or want to explore this option further, contact me from the details below to request a free loan strategy session. If you got value out of this video, drop it a like, and if you want more content like this, subscribe. I'll catch you in the next one. Thank you.